Good afternoon and welcome to Vista Asian Midday Market Watch. I'm Samantha Voon and my co-host here with me is Brian Fernandez. So let's start by taking a look at the summary of the market actions. Brian, over to you.
Now, overall, today, most Asian stocks declined, particularly in the technology and chip making sectors, due to increased concerns about US restrictions on China, potentially then sparking a new trade war. Now, moreover, remarks from Donald Trump regarding US defense expenditures in Taiwan added to the unease lingering in regional markets. Now, Asian markets were also led by weak performance from Wall Street. Now, where the chip and technology stocks that drove down the S&P 500 and Nasdaq Composite. These sectors faced a prolonged profit taking and as investors shifted towards areas more impacted by economic union. Now, over in Asian markets, particularly in China, the Shanghai Composite is seeing a decline of 0.12%. Concerns grew as Beijing might respond to trade tariffs imposed by the European Union. Now, Hong Kong's Hang Seng Index is up by 0.16%. Now, overall, investor confidence in chip-making companies remains uncertain, awaiting TSMC's second quarter financial results scheduled later today. However, the company shares fell overnight in Taiwan, influenced by statements from Trump and the broader decline in chip stocks. The stock is also faced with profit-taking pressure after a year of reaching all-time highs due to the AI speculation. Another crucial chip industry indicator, the ASML, exceeded earnings expectations yesterday, benefiting from rising demand spurred by artificial intelligence. Now, with that, over to you, Sam, on the updates for Australia, India, Singapore, and Malaysia.
Okay, thanks, Brian. So we have the ASX 200 in Australia decreased by 0.29%, pulling back from record highs after a much stronger than expected labour market report and that raised concerns about potential interest rate hikes. Over in India, the Nifty 50 index is up 0.13%. In Singapore, the STI is down 0.64%. In Kuala Lumpur, the KLCI is down 0.10%. In Japan, we see the Nikkei 225 drop 2.16%. So this is due to the losses in the chip-making stocks. We have a report from Bloomberg highlighting the potential stricter trade limitations on China, particularly if companies like Tokyo Electron and ASML Holdings continue to supply chip technology to China. And of course, this could potentially lead to more problems and retaliation from Beijing, and that would lead to greater tensions between the world's largest economy. So that's for Japan. In South Korea, we see the Kospi index declined by 1.3%, reflecting the broader negative sentiment towards Asian markets amidst ongoing trade and technology conflict. Nonetheless, many regional markets were still near their peak levels, buoyed by optimism that the Fed might indeed cut rates as early as September. So that's all I have for today's market updates. Brian, over to you.
Now, with that, we're going to bring on to get insights Glenn Yin. He's the head of research and analysis at AETOS Capital Group Private Limited, coming to us out of Australia. Glenn, welcome back to the show.
It's great to be back. Thank you for having me again.
Now, Glenn, we've had a tech bloodbath, Nasdaq's worst day since 2022. What's going on really? Is it a case of sector rotation, taking profits, or is this really the start of the end of the tech rally?
Yes, Brian, it was indeed a very scary session with tech giants finishing deep in the red. And, we have received multiple client queries this morning asking whether, same questions you've asked, whether this is a pullback, a correction, or the end of the tech rally. I think, honestly, the downside risk and momentum have been building for quite some time already. If we look at the tech-heavy Nasdaq 100, the index had scored 27 record highs from January to mid-July. The S&P 500 had done pretty much the same thing, which also has about 30% weighting in tech stocks. So valuation, particularly forward earning multiples, are very high. Another reason is the Trump trade. For anyone who has been trading markets back in 2016 all the way to 2020, it's a familiar feeling. When Trump said something radical, markets would often experience knee jerk reactions, and it's no different this time. Trump said Taiwan needs to pay protection fees for America to act as an insurance company. So I'm sensing the real play here is the semiconductor industry, namely TSMC, which has a global market share of over 60%. So veteran traders would be able to sense something along those lines of, uh, you know, taking the semiconductor business back to the US, whether it's a real deal or it's just for the sake of votes, uh, uh, you know, or just in case of any potential geopolitical conflicts that could severely impact TSMC's production capacity, as well as the US tech firms that rely on such production capacity. In short, we must watch out for the rise of the unilateral protectionism and the downside risks for tech stocks.
Now, Glenn, I want to drill down a little bit more on Trump and the opportunities then in terms of, so we've talked about the negatives, but in terms of the chip making sector, but where are the opportunities? Which are the stocks that have started to move in positive territory because of the Trump effect?
Yes, Brian, Trump trade is back, baby. Right, that feel, that familiar feeling. I mean, just look at the gun stocks and the prison operator stocks. They jumped immediately on Monday following the shooting in Pennsylvania. The gun stocks, well, Trump has been a long-time advocate for the Rifle Association and the such. But these jumps are all priced in based on markets' perception of Trump's policies. For instance, his tough stance on illegal immigration could create demand for detention centers and prisons, hence the increasing expected profitability. In the energy sector as well, we saw some losers. We saw reversals in clean energy due to Trump's advocacy for fossil fuel suppliers. Invesco's solar ETF and iShares Global Clean Energy ETF had plunged as well. So the reshuffling is already happening.
Mhm. So, not just that, Glenn, we also see gold cracked another all-time high yesterday. Yeah. So, is Trump presidency good for gold as well?
Very sharp eyes, Sam. Gold has made its 20th all time high this year. I would say a Trump presidency is good for gold, but for all the bad reasons. Firstly, there's the uncertainty if he's elected. Recall he just quits all these free trade agreements, like deleting the WhatsApp group chat in his first term, and that he wanted to build the Great Wall between the US and the Mexican border. Impulsive actions like this are perfect fuels for uncertainty. And markets love gold when there's fear and uncertainty. Secondly, during Trump's first term, the US dollar was much weaker than it is right now. Look at this, go back to 3 months, we're hovering at 108, 108, 109, and the highest would be 114 in the dollar index. But during Trump's first presidency, it was as low as 88 points and averaging about 94, 95. But that was it. So a weaker dollar is great for reviving the American dream and exports, but also excellent for gold prices too, because gold is priced in USD. So overall, there are lots of interesting variables going on. Plus, President Joe Biden had just been tested positive for COVID this morning, and the rumors continue to build around his resignation.
Mhm. Thank you so much for your insight, Glenn. Those were gold insights.
Thank you very much.
We've been speaking to Glenn Yin, Head of Research and Analyst at AETOS Capital. This has been BizTech Asian Midday Market Watch. Be sure to keep informed on the latest market updates weekdays at 1 p.m. I'm Samantha Voon.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be on our syndication partners' TV stations, radio stations, and website. Remember to like and subscribe. Thanks for tuning in.